Everybody, we're live. This is 𝘎𝘀𝘾𝙊𝙈 with 𝘨𝑀𝑒𝑡ALS.com. It is Tuesday's Cowboy Metal live stream. We do this every Tuesday. We have switched our time to earlier in the day. We're broadcasting this about 2:30 Central Time in the United States from the great state of Texas. Doing a sound check. Looks like sound is good on my end. Let me know, guys, if you do not have sound on your end, and we will get that fixed. But sound is looking good. Thank you, everybody, for joining. Remember, super chats are open. If you want to leave a question, I would be happy to answer them for you. And if you have any other questions, just put them in the chat, and we'll be happy to answer those questions for you. So we're going to get started today, and I'm going to give you the one chart that probably concerns your central banker the most. And that chart is going to be essentially what happens to gold when we have a situation of lower interest rates. We'll get into that in just a moment. Before we do, you guys might have noticed a little bit of change around YouTube. We do have a store now available, and that store was basically born out of demand. You guys really like the hat and the merch that we have, and this all sprung from when we did an in-person conference a couple years ago here in Texas. One of our days of conference was in person, and I put the hat on, and people just loved it, and people have been bugging me to have these hats ever since. That was a little over a year ago. So we finally have gotten to the point where we were able to maybe put together some designs for you guys. We put out a design on Twitter, and you guys voted on that, and you liked the design that we had of the shirt that I'm wearing now. So I'm going to stand up and show it to you. And this is the Silver is Freedom shirt, as you can see here. Keep on stacking. This is our original logo. And then our social media manager designed this one, but that was based off of what you guys wanted. It's this really cool eagle design that we put on this shirt. And now I'm able to sport it and wear it around. And I got the really super comfortable one, which is really nice. It's a lot of fun to have on. And if you go to the store, basically you can just click below on the YouTube link and go to the store. I'm wearing the super comfortable men's tee. We have other options as well. We have the ladies V neck, and they're all in different sizes and colors. So you can go as large as 4X if you want a super comfortable night shirt, and you can get different colors. You just click on that link below to the store, and you can order that merchandise. And it does help the program. The reason we did that is because it does help. It allows me to bring you great free content to you guys every day, like what I'm about to bring you. What I'm about to bring you, well, this basically, I think, is the chart or the couple of charts that's going to do it for gold. We've had a big pullback, and a lot of people are concerned, and understandably concerned about gold, because if you look at the gold price, oops, I went to goldsilverpros.com. Let's go to gold price. There we go. And we're currently trading at 1827.58. We're up $10 on gold and up 30 cents on silver. Not doing too bad, but you can see this big pullback. Why are we down in the 1800s? And a lot of it has to do with technical trading on gold. It's a paper traded. But the thing that always happens is gold asserts itself during certain times during a crisis. And we're definitely in a crisis. We're in a recession, probably headed toward a depression. And if you look at this chart, this is our GDP. It's something that I wrote for Jan Bullion last week, had to do with debt to GDP. And it was Carmen Reinhart and Kenneth Rogoff from different universities. One writes for Harvard, is a tenured professor there. One, I think, maybe Stanford or some other, well-known school. Back after the last crisis, after the 2008 crisis, they did this research, and they said during 90% debt to GDP, meaning if all of your debt adds up to 90% of your yearly national production, that you're at the point of no return, in which you're going to have high inflation, you're going to have to do some sort of debt restructuring. Something's going to have to happen for you to get out of that situation. You're not going to have growth. Well, this is where we are now. The red line is U.S. public debt, which is 31.456 trillion. The U.S. GDP per year is only 26.132 trillion. So we're way past that 90% ratio. We're at 31 over 26, which is 100 and something percent. And so we're at the point at which the debt starts to matter. And that's the point that I had been bringing up lately, is the debt really does matter here. And the debt starts to create issues when it gets to 90%. You can see we're well over 100% here. So we know that the debt is going to be an issue. We know that we're going to have to clear out the system. And what is the Fed doing? They're raising rates. How is the Fed raising rates? Well, they had it down here. And then after the pandemic crisis, they dropped it to help with the pandemic. And then they held it. And then they've done this stair-step increase. Most of these were half a point increases. I think there was a 0.75 and a 0.25 in there. Anyway, these are the increases that they've made. So now the federal funds rate's up to almost 5%. I think 0.25 more, it goes to 5%. Right now it's at 4.75. So we're sitting there at 4.75. Good in case you have a recession, but look what happens to gold. Interest rates were up here, and then they fell, and then they rose temporarily and fell again, and look what happened to gold. As the central bank is releasing interest rates down to near zero, gold goes from about $300 an ounce to $1,900 an ounce. Why? Why does the Fed fund rate matter so much with regards to gold? It matters because when you have negative real interest rates, gold explodes. It shoots through the roof. What is a real interest rate? Well, it's when you take the interest rate, the federal funds rate, which right now is at 4.75, and you subtract out a common issuance of treasuries like the 10-year or the 2-year. Let's do the 10-year. 10-year yesterday was trading at 4.8. Let's see what the 10-year is trading at now. I'm just going to go to CNBC. We're going to look at the bond market, and we're going to see what bond rates are. It's going to tell us here that the 10-year is sitting at 3.906 and the 2 years at 4.799. Okay. 4.799 on the 2-year is higher than the 4.75 federal funds rate. So we're said to have a negative real interest rate, meaning the CPI or the bond rate is essentially higher than the Fed funds rate. What about the CPI? Well, we had a CPI print of what was it, 6.4 or so. That's higher than the federal funds rate of 4.75. So we're in a negative position when it comes to the interest rate, the CPI, and the bond rates when with regards to the federal funds rate. So the federal funds rate has to keep going up essentially to put us in a position where we're not going to be in a recession and give them the position to reduce interest rates into a recession. That's what they want to do. They want to reduce interest rates into a recession. They want to get the federal funds rate above CPI. That's what the Fed thinks is going to control it. But what happens when they do that? All of this tightening has slowed down gold. As you notice, as they start to retighten in 2016, we had a tightening phase, which actually led to gold price going up, and then we eased, and then gold shot up, and then they tightened again, and then gold's come back down. So every time the Fed tightens initially, gold comes back down, but it begins to go back up as the crisis starts to rear its ugly head, and they have to ease. What did they have to ease here for? COVID, 2020 COVID. They shut the economy down and they eased. What happened to gold? Gold went from here to here. So when they drop rates at a fast pace, like in a recession, gold just explodes upwards. When they drop rates at a fast pace, gold explodes upwards. This is what's going to happen. As the Fed gets to the point where they have to consider a pivot because we're in an official recession. And make no mistake, that's why they put the rates up at 5%, because the IMF study showed across the world, when you get to 5%, you can start to fight a recession. You need 5 full basis points of central bank room to fight a recession. Well, we're almost there. And guess what? We're in a recession. Most everybody expects we're to be in one. Last year, we had kind of a head fake. We had 2 consecutive quarters of negative GDP, meaning GDP did not grow. Okay. And if that's always been an official recession, well, the White House said, no, employment's good. We know employment's not good. But they're saying there are other green shoots in the economy. So nobody officially called recession. Everybody's like, well, okay, well, you know, and all the technorati and all the other people, you know, in finance said, well, maybe they have a point. And nobody called a recession. Well, we're definitely going to one this year. Most analysts believe so. And the data that's coming out from last quarter is basically showing it. So at some point in time, the Fed's going to have to reverse course, either this year or next year. I can't see it going much farther, because when we go into official recession, the central bank playbook in the United States and around the world has always been to ease, to lower interest rates, to buy more debt. Well, when they do that, guess what happens? Boom, gold shoots up here, and boom, gold shoots up here. So our next big rise in gold is going to be when the Fed starts reducing interest rates. And they're going to have to start reducing interest rates because we're in a yield curve inversion where the 2-year is commanding a higher yield than the 10-year, and the bond rates are starting to get out of control. And CPI has been elevated now for about a year, and that's a concern. So I think that they're going to continue to raise rates as long as they can to try to get that federal funds rate above CPI if they can without crashing that economy. However, we're starting to get that negative news in the 4th quarter results. And so we're not sure that that's essentially going to happen. We're not sure the Fed's going to be forced to pivot. But when they pivot and go back down to 0 interest rates, and you got that really big, high negative real interest rate number where CPI minus that federal funds rate and CPI minus those bonds rates show a negative value, which they will, because CPI is going to be higher than the yield that you're getting from the Fed or the yield you're getting from like a treasury or a bond, at that point, that's when gold does really well. Why? Because you're not going to buy a bond to offset that inflation risk. Okay, bonds get more risky when you have high inflation, especially in this situation. We're not sure if the government's going to be able to pay back their debt, and so people are going to flood into gold, and that's what causes gold futures to shoot up. Okay, so now I think the real people know that. I think people buying physical already know, and that's why physical is flying off the shelves, and why I show you those charts all the time about physical flying off the shelves, because it is. But essentially, what's happening is the people won't rotate out of bonds and other safe haven assets until those real interest rates go severely negative, and then gold's going to shoot up. Well, if we're getting close to a recession, the data is showing that the economy is not doing well, and the Fed is starting to slow down from a half-point hike to a quarter point, and the Fed's starting to talk about maybe getting to that point where they're comfortable. Then at some point the recession hits. Then they've got to start easing. That's when gold's going to shoot up. And that's when I think we're going to see the next big leg in gold. And it happens all the time. It's pretty typical. So I think the physical purchases are flying off the shelves, but the futures market, where the spot price is determined, that we see every day on gold price or wherever we're looking at our local dealer, that, futures price is not really going to shoot up until we have the Fed announce we've got to reverse course or we're changing course. And that changing course could be we're no longer raising interest rates. We're just going to hold them steady. At that point, I think gold starts to shoot up, because at that point, the gold holders know, and the market knows, the Fed is stopping here. They're eventually going to have to ease. That's bullish for gold. And I think that's when you're going to see gold start to explode. And you can show that basically just sitting right on the chart. You can just look at that chart. And if there's no other chart that you ever look at a chart of the federal funds rate. Look at that chart I showed you. The federal funds rate versus CPI and versus gold. That's what's going to tell you when it's really, going to break it. And that's, I think, when we're going to find out what the true potential high price of gold is. We all think that with all the money printed, it could be 5,000, 10,000. We'll have to see what happens. I think that's when officialdom jumps in and they try to set the price of gold. Why? Because they're going to set a price that's advantageous for them, because they're going to want to keep the commercial banking system going. So they're going to want to set an XYZ price. But I think the public's going to have something to say about that as well. And I don't think it's necessarily going to be the same thing that the central bankers and the commercial banking system wants. I did put a poll up. Does gold still serve its role as money and safe haven asset? 90% say yes, it does. 10% say no, it doesn't. I think you guys probably have the right of it there. If you have questions, super chats are open. Ask that question. I'm happy to answer it. We're monitoring that. I haven't seen a super chat come across. Feel free to ask it. The Amazing Misco asked the question, what will they call it? Hyper QE? Yeah, that's a good question. I think the phrase that's been dubbed by the financial media is QE to infinity. And I think that we're already there, because they've never officially stopped QE. It just comes in rounds or tranches, if you will. They've never actually reversed course. So I think QE to infinity has a nice ring to it. You guys, if there's something else that you like with regards to that, let me know. We can coin a new phrase here if you want on Gold Silver Pros. Thanks everybody for joining. We got 150 people watching the broadcast. Again, sorry for the technical problems we had before. We use StreamYard to connect to YouTube. YouTube does not provide its own streaming software, and basically StreamYard, Riverside, Zoom, they all suck, to be honest with you, and we're just using what we have available to us. So apologize for the StreamYard problems. But we did get it up, and we are here. And thank you so much. Everybody came back in. Appreciate you guys being patient for 30 minutes and coming right back in. That's been awesome. We've got a full house here. Looking for additional questions. When did the dinosaurs die? Vlad asked, and that's a good question. I don't know. If we want to roll out a conspiracy theory, I'm going to argue that the dinosaurs never lived, at least not in the way that science says they did. And there's a lot of research around this, how most dinosaurs up in museums now are all fabricated bones, and they're supposedly storing the good bones, which are fragile. Has anybody ever seen them? And if you go and look at some archaeological history, there's a lot of things that sort of counterdict what people say were the dinosaurs and Neanderthal man, stuff like that. And I'm not talking creationist theory. I'm not talking about from a religious perspective. I'm talking about, I believe that the world is how many ever billions of years old, but I don't necessarily believe that the dinosaurs were what science said they were. I think it's a lie, and that's a hot sports opinion for you guys. In any case, if you have other questions, let me know. Delivery month starting today, said Wildcat. Yeah, I believe the the first or second, I think maybe 2 business days before the start of the month. So officially, we are in delivery for March for sure. March, I don't think is a huge delivery month. Let me go look real quick on CME, on the CME's website if March is a huge delivery month, and I'll tell you whether I expect to have a lot of deliveries in March. Typically, they come where you have lots of volumes, you have lots of contracts, and the dominant one for gold is April. We do have right now 1,600 contracts open for March. 295 of those have stood for delivery already. 1,027, about 3 times as many went over to London. So 3 times as many contracts for February are going over to London as what's staying to be delivered on the February contract. We don't have March data for delivery. So it looks as though it's not a big delivery month. I don't think we're going to see a lot of delivery in COMEX for this month. You'll see a little. The next big month will be April because that's where all the volume's coming. So expect bigger delivery months in April. And I think that's why they see the EFPs, because EFPs tend to spike in months at which COMEX doesn't have a lot of physical delivery going on. Only about 6 months in the year for gold and silver, and they're different months with the exception of December, are big delivery months in the COMEX in the States. The other 6 months are not. And so what happens is you have a lot of EFPs over to London, or people go to different markets to get that physical delivery. You can still deliver in any month, but you have to have somebody willing to do delivery. You have to have a short willing to provide delivery. And when there aren't a lot of contracts, you don't get as many physical deliveries. Thanks, Steve Voitis, for the contribution. His question is, are COMEX and other vaults continuing to be drained of physical gold and silver? Yes, they are. We just did that on the weekly market wrap. Steve, if you watch that on Sundays, usually comes out somewhere between 2 and 6. On Sundays, we'll release that. We go over the inventory levels, and I did look at both the COMEX and the London delivery levels for silver along with the free liquid available silver on COMEX that's the registered, and it's very, very low. And so I think we're closer to a physical shortage condition in silver on COMEX than we are to gold for sure. We'll have to see what happens. I'm not saying that we're going to have an imminent physical shortage, but we're getting a lot closer to that. It certainly is a lot less physical silver available than there was during silver squeeze 2 years ago, almost exactly 2 years ago, during the late part of January, early part of February. Ion, William Sorensen's asking about Ion. I don't see an update on Ion. I haven't looked in the last couple of days. And so what happens is different updates will trickle out. So we definitely will do an update for you when there's enough substantive stuff there to talk about. On the CFTC's part, to update you on that, they do have the January 31st COT reports out for gold and silver, as well as for some of the other things, that the other commodities. I didn't check every single one, but of the 4 or 5 that I checked, we now have January 31st data, so we have additional week of data. I looked at gold and silver last night and did not see anything which would indicate who is selling off right now. So we need that February data, because the January 31st data, as put out by the CFTC on their website, explains nothing about the current gold and silver sell-off. It explains zero. So right now, nothing in the COT report is explaining why gold and silver are selling off, and I'll be interested to see that February data. It'll be interesting to see when we get it, maybe March before we get it, because the CFTC apparently does not have their own clean source of data, cannot provide their own clean source of data, is relying upon market traders to provide data for market traders, which is a conflict of interest, which I pointed out, in our original coverage. It's obviously an issue. CFTC doesn't seem to care, but we will update you on when those updated COT reports come out. I haven't seen anything in the COT report which explains the current sell-off. So we'll see if it's in the February data, which we may not go, which we're definitely not going to get till March, because that's what the CFTC has said. We'll see when. A reminder that we have a poll going. Does gold still serve its role as money and safe haven asset? 89% of you say it does. 11% say no, it doesn't. We're going to go ahead and end the poll there. As a reminder, guys, we do have a store which we are selling merchandise, and this does support the channel, which is why we're doing it. We thought that this would be a good way to service you guys, because back when we did our conference live in person 2 years ago, we had these hats out and we had overwhelming demand. I must have sent out 30 or 40. I gave some away at Silver Symposium. We were there a couple of years ago, and people have basically been begging us for merchandise for 1.5 years. We finally got to the point where we could do some designs. We're going to do new designs every single month. The design of this month is this one. It is the Silver is Freedom. You can see on this premium tee that I have. This is a design my social media manager came up with that you guys voted on Twitter. And of course, we have our keep on stacking that you see on the hat. And of course, we're going to do new designs every month. And if you go to the store, which I'll show you here in a moment, you can go order, you know, different colors and things like that. So it's linked right here below on YouTube. You just click on that store. We have a ladies version here in these colors. That's a V-neck. We also have version B, which is black lettering on light colors. We have our hoodie series, which is black lettering. Light lettering on dark colors. And then the shirt I'm wearing, which is this one, which is the blue one with the gray. And then we have the black with the gray as well. So if you guys are interested, that does support the program. And that is one way in which we can bring you the free part of the program that we do and pay all of our costs. Right here on the channel, we got lots of research for you, additional videos and playlists for you. Thank you so much. Until next time, Rob Kientz with Gold Silver Pros.